Welcome back. You're watching the ET Money Show. As we celebrate 75 years of independence, let's take a look at how the mutual fund industry evolved to become what is today a sunrise industry. Take a look. Ask anyone as old as independent India where they invested their money in their early years, and they will likely tell you that they bought gold or land, or that they deposited their money in bank fixed deposits. Incomes were lower, the capital market was undeveloped, and the mutual fund industry did not exist. In fact, the first mutual fund was set up in 1963 by an Act of Parliament. The Unit Trust of India, or UTI, functioned under the regulatory and administrative control of the Reserve Bank of India. The first mutual fund scheme was launched a year later, and over the next 25 years, the UTI managed to accumulate assets under management of 6,700 crore rupees. 1987 proved to be a seminal year for India's nascent mutual fund sector. It marked the entry of public sector mutual funds in the form of SBI Mutual Fund and Can Bank Mutual Fund. And in the next few years, LIC and GIC, the major insurance companies, set up their own mutual funds, and Punjab National Bank Mutual Fund, Indian Bank Mutual Fund, Bank of India and Bank of Baroda Mutual Fund were also set up. By 1993, with the influx of new players, the assets under management of the mutual fund industry had grown sevenfold to over 47,000 crore rupees. The next 10 years saw the entry of several private mutual fund players and the establishment of the Securities and Exchange Board of India. The introduction of regulations and new investment products led to a flood of inflows, and by 1993 the industry had assets under management of over 1.2 lakh crore rupees. The slow pace of growth till 2015 can be attributed to the global financial crisis, which shook the faith of domestic investors. But the launch of the influential Mutual Funds Sahi Hai campaign in 2017 by the Association of Mutual Funds in India and investor education initiatives served to restore faith in the industry, and mutual funds have witnessed a quantum jump in inflows since then. Assets under management, which stood at 10 lakh crore in 2014, have risen to over 37.7 lakh crore in July of 2022. Systematic investment plans have become a preferred vehicle for retail investors.
Of late, Indian mutual fund industry has evolved, and nowadays it's growing at a neck-breaking speed of more than 18-20% year-on-year basis. That is what we call the sunrise industry in the country. I will not hesitate saying from whatever level we are, 38 lakh crores up to 50 lakh crores, it will not take more than 2 years, maximum 2 years.
In the recent past, close to 12,000 crore rupees is invested in mutual fund schemes every month through this route, lending strength to the Indian capital market and making it more resilient to the whims of global investors. The pace of growth of the mutual fund industry in the recent past has been phenomenal. And with more investors joining the fold every day, this pace of growth is anticipated to continue well into the next decade. The future of this sunrise sector is bright, and so is that of New India. In Mumbai, this is Alex Matthew for ET Now. All right, well, here's a special interaction to celebrate India's growth story. Enam Group's